Part 5, Protecting the Future. Chapter 9, Protecting What You're Building. Protecting what you're building. By now, you've built a solid financial foundation. You've stabilized your savings, managed debt, started investing, and increased your income strategically. But growth alone is not enough. Life after 40 comes with uncertainties, health emergencies, job changes, market volatility, or unexpected family needs. Without protection, even hard-earned progress can be threatened. This chapter is about safeguarding your financial gains so that your efforts continue to benefit you and your loved ones. Protecting what you've built is not about fear. It's about control, planning, and resilience. You will learn how to identify the risks that could derail your financial progress, use insurance strategically to protect yourself and your family, strengthen your emergency and contingency plans, make retirement and estate planning work for long-term security. Protection is the bridge between wealth and peace of mind. It ensures that the stability and growth you've worked for are not lost to unexpected events. By the end of this chapter, you'll understand how to create a shield around your finances, turning your hard-earned progress into lasting security and giving you confidence to face the future without anxiety. Insurance basics: health, life, property. Insurance is one of the most important tools for protecting your financial foundation. After 40, it becomes critical because unexpected events, illness, accidents, or property loss can quickly derail years of careful planning. The purpose of insurance is simple: transfer risk so that a financial setback does not become a financial catastrophe. Here's a breakdown of the key types of insurance you should consider. Health insurance. Medical emergencies are one of the leading causes of financial stress. Health insurance ensures that unexpected hospital bills, surgeries, or chronic conditions do not wipe out your savings. Even if you are healthy now, protecting against high-cost events is essential. Life insurance. Life insurance provides security for your dependents if you are no longer able to provide for them. After 40, responsibilities like children, aging parents, or a spouse who relies on your income make life insurance a crucial part of your financial plan. The goal is not to create wealth, but to ensure that your family can maintain stability in your absence. Property insurance. This covers homes, vehicles, and other valuable assets. Property insurance protects against theft, fire, natural disasters, or accidents. Owning property is a significant investment, and insurance ensures that these assets are safeguarded against unexpected losses. The key principle of insurance is adequate coverage, not extravagance. Overinsuring can waste money, while underinsuring leaves you vulnerable. After 40, focus on policies that cover essential risks, match your lifestyle, and provide peace of mind. Insurance is not an expense, it's a protective shield. It ensures that setbacks don't destroy progress and that your financial growth, savings, and investments continue uninterrupted. Planning for emergencies and dependence. After 40, financial planning isn't just about yourself. It's also about preparing for the unexpected and ensuring the people who depend on you are protected. Life has a way of throwing surprises: sudden medical expenses, job loss, urgent home repairs, or family emergencies. Without a plan, even small setbacks can quickly spiral into major financial strain. Emergency planning. An emergency fund is the cornerstone of protection. While insurance covers large catastrophic events, your emergency fund handles everyday crises without forcing you to tap into investments or incur debt. Key principles for emergency planning: size matters. Aim for 3 to 6 months of essential living expenses in a liquid, easily accessible account. Adjust based on job stability, dependence, and lifestyle. Accessibility. Keep funds separate from checking accounts to avoid accidental spending, but accessible enough for true emergencies. Regular maintenance. Replenish your emergency fund after each use. Treat it as a recurring part of your financial routine, not a one-time goal. Planning for dependence. If others rely on your income, children, aging parents, or a spouse, your financial strategy must account for their security. Consider income replacement. Life insurance and disability coverage can replace lost income if you are unable to work or pass unexpectedly. Education and care costs. Plan for ongoing expenses, such as schooling or medical care for dependents. Legal protections. Wills, trusts, and guardianship plans ensure that dependents are cared for according to your wishes. By planning for emergencies and dependents, you remove much of the unpredictability and stress that comes with financial responsibilities. You create a system where unexpected events are absorbed rather than catastrophic, and where the people you care about remain protected. After 40, this preparation isn't optional, it's essential. It transforms anxiety into control and confidence, letting you focus on growth and stability without fear of sudden setbacks. Why protection matters more when time is limited. After 40, one reality becomes unavoidable. Time is no longer on your side in the same way it once was. While younger investors can afford to take risks and recover from mistakes, those starting later face a compressed timeline to grow and secure wealth. This makes protecting what you already have not just important, it becomes critical. Here's why protection takes on greater significance at this stage. Limited time to recover from losses. Market downturns, bad investments, or unexpected expenses are easier to recover from when you have decades to rebuild. After 40, a significant financial setback can shave years off your growth potential, making insurance, emergency funds, and risk management essential. Greater responsibilities. At this stage, responsibilities are often larger: mortgages, dependents, aging parents, or healthcare costs. A single unforeseen event can have a cascading effect on multiple areas of your life. Protection acts as a buffer, preventing one crisis from destabilizing everything else. Compounding needs time. Wealth grows best when investments have time to compound. Losses or unplanned withdrawals interrupt that process. Protection ensures that your existing savings and investments remain intact, giving compounding the chance to work its magic. Peace of mind accelerates decision-making. When you know your family, assets, and future are protected, you can make growth-oriented decisions confidently instead of reacting out of fear. Time-sensitive opportunities are easier to seize when you are not constantly worrying about what-if scenarios. In short, protection after 40 is not optional, it is the safeguard that makes growth possible. You can still increase income, invest, and build wealth, but without insurance, emergency planning, and risk management, every step forward carries unnecessary danger. The principle is simple. As your time horizon shortens, the cost of mistakes rises, and the value of protection multiplies. Shielding what you've built is not a backup plan, it is a core part of a sustainable financial strategy. Avoiding financial predators. After 40, your financial position is often stronger than it was in your 20s or 30s, which can make you a target for scams, predatory lending, and high-pressure schemes. Financial predators thrive on fear, urgency, and lack of knowledge. They promise quick wealth, guaranteed returns, or once-in-a-lifetime opportunities, but their goal is to take your money, not help you grow it. Recognizing and avoiding these threats is a crucial part of protecting your future. Here's how to stay safe. Be skeptical of too-good-to-be-true offers. High returns with little or no risk are virtually impossible. If someone promises guaranteed wealth in a short period, it's a red flag. Verify credentials. Only work with licensed financial advisors, regulated investment platforms, or well-known institutions. Check registrations, certifications, and reviews before committing any funds. Avoid high-pressure tactics. Predators often create urgency. This offer expires today, or only a few spots left. True investment opportunities don't vanish in hours. Pause and evaluate before making decisions. Protect personal information. Never give banking details, passwords, or personal identification to unsolicited contacts. Identity theft and fraud are common tools used by financial predators. Stay educated. Knowledge is your best defense. Understanding basic financial principles, investment options, and risk helps you spot schemes before they cause harm. Consult trusted sources. Before making any major financial move, talk to a reputable advisor, a financially savvy friend, or a family member you trust. Predators rely on isolation to pressure you into decisions. After 40, avoiding financial predators is not just about protecting money, it's about preserving the stability and progress you've worked so hard to achieve. Every safeguard you put in place reduces risk and gives you the confidence to grow your wealth safely. In this chapter, you learned that protecting your financial future is just as important as building it. Insurance, emergency planning, and safeguards for dependents create a safety net that allows your wealth to grow without constant fear of setbacks. You also learned why protection matters more when time is limited, and how to avoid financial predators who prey on fear, urgency, or lack of knowledge. The overarching lesson is clear. Stability and growth go hand in hand with protection. You've worked hard to increase income, reduce debt, and invest wisely. Now it's time to shield those gains so that unexpected events don't undo your progress. In Chapter 10, Staying Consistent When Motivation Fades, we shift focus from protection to persistence. Motivation naturally fluctuates, and long-term financial success depends on steady, disciplined action rather than bursts of enthusiasm. This next chapter will guide you in building habits, routines, and systems that keep your finances moving forward, even when your energy or inspiration dips. Protection secures what you've built. Consistency ensures it continues to grow.